There's only one person who's been missing from the podcast for so long. The record holder on FTMO, over 120 times on the leaderboard. Plus, he's on the leaderboard at the moment. It's the one and only Bernd Skorupinski.
I'm still trading that $2 million A-book fund. Right now, it's 11th of October. I'm right now today on the FTMO leaderboard as well, rank 4. Accumulated roughly $60,000 this month so far. I'm a firm believer that you cannot build your trading edge yourself. I firmly believe there's nobody self-taught trader, so you cannot just go out there and build your trading edge yourself. I firmly believe it's not possible. There are always anomalies. There's 1 out of 1 million. You will see now me saying that in the comment section. There will be like people saying, what about this person? Yeah, but what about you?
Can you talk about a significant low moment in your trading journey or even outside of trading that really stands out to you? You may have felt like, okay, I couldn't overcome this, but then actually was maybe one of the reasons you got into the position you're in today.
Poor. And you see, I'm getting goosebumps because this means so much to me. So you asked that question and I've never mentioned that in a podcast.
Number one podcast in the trading space, the fastest growing, and that's thanks to every single one of you. Welcome everyone back to the Words of Rizdom podcast. We are back once again and still the number one trading podcast in the world and the fastest growing, thanks to all of you and our incredible guests. Talking of which, we have a very special guest with us today. I can't tell if you can tell what's happening in the background, where we are, but we are actually still in Dubai. So there's only one person who's been missing from the podcast for so long. We finally got hold of him because we knew where he would be at his office, so he couldn't escape. But it's the one and only, the record holder on FTMO, over 120 times on the leaderboard. Plus, he's on the leaderboard at the moment, which is absolutely incredible. And it's the one and only Bernd Skorupinski.
Riz, thank you so much for the introduction, and welcome to our office.
Yeah, thank you. It's a beautiful place.
Yes, thank you for having me. It's a premiere, right? It's our first 101.
Yeah,
and it's basically also our first podcast here in our new office here in the Opus Tower in Dubai. Right. So it's a premiere through and through today. So
I love it.
Exciting.
We last saw each other in March.
Exactly.
We did a roundtable. As I said, though, we should have done a one-to-one before that, really. But I'm glad we're doing this because this is going to come out very, very soon, which is very rare for us. So we can talk about like recent topics, recent going-ons in the marketplace. To be fair, we recorded just before a lot of things started shifting within the community, right? Especially with prop firms, they started completely changing. Literally just after we recorded that roundtable, which was interesting. So, like, what are your thoughts? Obviously, you're still trading prop firms at the moment. Is it still a focus, or is your focus diverted elsewhere?
No, I'm still trading prop firms, basically. So my focus was always on that A-book fund that I'm still trading, that $2 million A-book fund I'm still trading. And then I'm still trading, obviously, FTMO. As you said, I'm right now, it's 11th of October. I'm right now today on the FTMO leaderboard as well, rank 4. So accumulated roughly $60,000 this month so far. And I'm trading like 1 or 2 more prop firms, but that's basically it. I don't know if you have seen, I've done that YouTube challenge documentary as well, live, where I said, okay, let's do a $2.1 million challenge documentary across 6 prop firms, and let's call these trades before it happened. And this is where I got approached by several prop firms. And so it was 6 prop firms. I passed the challenge, but then I was also trading on one of them, which then I would say scammed me because they got broke. So I made actually more than $30,000 on that prop firm, and then they never paid me out. And then they basically went bankrupt, and then they left the space. And I think that's what we are right now. And yes, so my focus is still on prop trading, but I think from March to now, which is October, end of October, close to end of October, a lot has happened in that space, especially with prop firms shutting down left, right, and center. And that's quite sad to see how the industry has shifted a little bit from, in the very beginning, firms with good intention, and then all of a sudden, like, it felt like firms are like growing apple on trees, like left, and so many new firms are coming out, and they didn't have good intention anymore. And you know it better than me as well, that it's so easy nowadays to open a prop firm, and there are no real obstacles. Everyone can open a prop firm, can call themselves a CEO of a prop firm, and then they are basically operating from their bedroom. And they don't have any cash reserves, nothing. They completely rely on a technology provider, pay them a little bit of money, and then they get into the prop firm space, and they can run from their bedroom as a single person with no cash reserves. They can run their own prop firm, and that this will not go well. It was kind of clear from my point of view that this is that the industry has to shift.
Well, it looks like it's shifting slowly right at the moment anyway. But it's interesting because, as you say, anyone can. And after the experience I had early in the year, I find it bizarre that there's still influencers that are trying to open prop firms. I do personally, because it's like they should have used at least what happened with myself as a reference, right?
Yeah.
I was like, okay, this is not a good idea. At least leave it to the experts, leave it to people who have the knowledge, experience, and so on. But I still see, I literally had a conversation last week here in Dubai of some young influencers who want to start a prop firm. And I was trying to tell them, like, this does not seem like a good idea, because what experience do you have? I was asking them certain questions, very basic questions, and they didn't have the answers. And yet they're looking to launch soon. And I was like, this is why don't people learn? Like, you'd think by now people would be more aware. Both sides are like people trying to start props, but also people choosing prop firms, right, of who to trade with. Because you see certain traders who are getting denied payouts or whatever it may be, and getting annoyed and frustrated and effectively impacting their trading journey. But yet they went to a firm that's unknown and never heard of, with some crazy rules and so on and so forth. You'd think by now, after the last six-ish months, people would be a bit more aware, a bit more careful, a bit more selective, thinking a bit more about quality than just any firm and any price or any targets, whatever the rules may be.
Yeah, but there's so many problems, right, lying underground, basically. First of all, there's no entry barrier for there's no regulation overall. So hence there's no entry barrier. Everybody can open up a prop firm. I even myself, back in the days when, let's call it, all the FTMO hype, started with me, and, I got approached by a technology provider to open a B-Book challenge prop firm. And back in the days, I was really, and I made a YouTube video about that as well, saying, hey, B-Book, A-Book prop firm, and the big conflict of interest. We can dive into this as well. That the whole, so back in the day when this technology provider and broker, which was Prop Trade Tech and 8cap, approached me and to open up a prop firm. So first we were very excited, and then I told them, hey, but what about that B-Book model? Because a traditional prop firm, everything is demo, right? So already that is a conflict of interest, because you are betting on the failure of the trader. You only survive if the majority of traders fail. And for me, this was already from the very beginning then a little bit of, well, not a little bit, this was like a big conflict of interest. And I told them, yes, I'm interested in general to open a prop firm, but more like a real prop firm where you have a hybrid model where you can B-Book, but also A-Book the professional, the consistently professional traders. That was always my goal, to open something that is in the favor of the trader and not like against the trader. Because I run my own educational company as well, Online Trading Campus. So that's a big red flag if I open a B-Book demo prop firm, but I have to bet on the failure of my students, right?
Course,
I mean, it doesn't work that way. And I addressed that issue right from the beginning. And back in the days, they even guaranteed me, yeah, we do that hybrid model and blah, 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 we're going to do that. To cut a long story short, this was like they delayed the process, came up with more excuses why we cannot launch yet. And then very close before the launch, they said, oh, by the way, we cannot have this hybrid model. We can only have this B-Book model due to risk management issues, whatever that means. That's what they said. And then I said, what? That was never the deal. The deal we signed was like that hybrid model. And they said, no, sorry. The things things have changed in the industry, so it's too risky to do that hybrid model for us. So then I said I canceled the contract, and we said like we cannot run with you guys because it's a big red flag, big conflict of interest. I want my students to succeed. In fact, I want everyone who trades on my prop firm, I want everyone to succeed. That's why I would do it, right? And so yeah, and this was basically the reason why back in the days I stopped that project prop firm. But in general, obviously, it's something that the idea of a re-prop firm is super nice, right? Because it should always be in favor of the trader, and the trader should be able to make money without. And then you said it, because then there's a low entry barrier. You have to pay. I remember you just have to pay $10,000, and then you pay $10,000 literally. Right, you pay $10,000, and then all of a sudden you can call yourself a prop firm owner. What is that? There's no background check. There's no check of, hey, what are your cash reserves? How much cash do you have? Because eventually you have to pay out the successful traders. So yeah, I mean, that's a big issue, and I think this has to be addressed and also slowly being solved in our space. I don't know what's your point on that, but.
No, I completely agree. I think slowly over time things will get cleaner, things will get better, but it's just a timing thing. I think it's unfortunate because if you look at any industry that has grown and matured, it's been a similar process. Like there'll be bad actors, there'll be bad decisions that are made, even if it's not malicious. It's just that they made poor decisions as the owners or the managers of a company, and therefore just made the wrong decisions. Unfortunately, people get hurt with those wrong decisions. That's the nature of business. It's very sad, but it's kind of what leads to progress eventually. And plus, I think it hopefully opens the eyes slowly to traders, because the next question after that was going to be, do you feel like a lot of traders have really tailored their whole journey and strategy for prop trading? Because obviously with prop trading, you get that whole reset. So therefore, they don't actually have a true edge, which is why a lot of them also have psychological issues. So they might be getting consistent payouts currently, but it's not because of an edge that they have in the markets. It's an edge they have over the prop firms. And then when something like these circumstances that we have now, when it comes to prop firms being on a bit shaky legs, are they here for the long term? Are they not? Or the changes, it makes them feel very anxious because that's their edge, is the prop firms. So if prop firms went, God forbid for them, but if prop firms went, they would be lost and they wouldn't be able to make money from the markets anymore because they don't actually have an edge in the markets. What are your thoughts on that? Do you find that when you observe the space?
That's a really good question, because that kind of prop firm space dilutes the word consistency of a profitable trader. A trader doesn't have to be consistent anymore to make profits. They just have to be good in flipping accounts and having, maybe a small technical edge, and do 10 challenges, like put the coin 10 times into the slot machine, hoping that one time they will get the jackpot, which was trading. It's kind of more likely than with a slot machine, because you just need a small technical edge to pass one entire evaluation out of maybe 10, and the one time that you pass the evaluation, then you get a funded account, and then you do one all-in trade. You get into a trending market, you do like all-in, which is like, if 5% is the daily drawdown, you do like 5% risk or even more, and then if it goes your way, you are lucky, and then you scale in even more, and then you get that lucky shot where you have that high payout, and then you get that one payout, and then you post that on social media everywhere, and maybe you get one more payout in like 2 months' time, and then everybody thinks you are consistent. But who knows how many challenges you have bought? Who knows how many accounts you have wiped out to get like this one single payout? And this is what I mean by diluting the space of showcasing who is like real consistent or not. Because at the end of the day, prop trading is not, it's trading, but it's not like real trading in terms of the traditional way of trading. Hey, I have to perform on a monthly base, and I can never go below X drawdown, and trading your own money, or maybe even a real fund. And that's why that's why I like that A-book fund that I'm trading, because it's has basically 7% max drawdown. There's no daily drawdown. It's now also a third party. I don't know if you're aware of that. It's that I started that process. I don't know. It's been now 1.5 years where I moved from $1 million to $2 million A-book account that is now third party verified from Alpha Performance Verification. They also work closely with the SEC and with big brokers like Interactive Brokers. They verified their statements as well, and they verified my statement as well. Which is basically a consistent return months over months, which I would say in a traditional way, this is real trading to get like consistent return month over month without getting into big drawdowns.
Yeah.
And that's the big point.
That's the essence of profitable trading.
Exactly.
That's the goal of profitable trading. And that's why I say like the prop firms though have such benefits to the traders, right? Because if you're undercapitalized, it's a fantastic way, especially if you have an edge. And even if you don't have an actual technical edge or trading edge, but you have a prop firm edge, cool. But your goal should still be, if you want to be a trader, that is, to build that technical edge, right? Because as you mentioned, let's say you don't know how many challenges have been blown and purchased to get let's say 150K payout. But then if you do the math on the actual accounts, say they lost, the overall drawdown on 10 accounts on a 100K account, let's say, that's $100,000.
Yes,
and then they got one payout of 50,000.
Exactly.
So in the trading world, they're actually down 50K. Right? But on
100%.
paper or on their payout schedule, those 10 accounts cost them $5,000. So they've lost $5,000 to make 50, and then that's their prop firm edge, which again, there's nothing wrong with that. That's your thing.
Exactly.
But equally, the prop firms, as we've seen over the last 6 months, have started to change rules to try and eliminate that. One interesting thing I've always found, I don't know what your thoughts are, but you've seen some of these quite popular, and it's nothing against them either, but it's just I find it so interesting, is I have quite popular trading influencers who built their names in the prop world by having a prop firm edge where they would risk very high, and they managed to get very high payouts because of this. But then they started their own prop firms, but they didn't allow that. They then said risking high is not allowed. And I've always found that interesting, because it's like, but like that's your whole brand almost. Your whole name has been built off that. So you're saying it's not allowed either because it's not an edge.
And then you're building rules to actually avoid these the same, that somebody like you joins your prop firm. Again, like for me, it's like a red flag, a big conflict of interest. If you do your own prop firm, then allow your trading style to be traded on your prop firm. Otherwise, what's the point, right?
Yes.
Then otherwise, it's clear. It's just they want just a quick cash grab.
Yeah.
Right?
To move on from the prop firms, I've
Yes.
got one last topic, because this is something that I found out just this week whilst I was here, and I didn't know existed. And I want to find out your thoughts on it as someone who does have a true technical edge, because I think it is extremely misleading and disrespectful to actual traders. Because I found out that these small influencers, who are very well known for being affiliates to many prop firms, they actually get funded accounts given to them, right? So no challenges, funded accounts given to them, but they have a 2% cap on profits to use for marketing purposes. So obviously they still need to make the 2%, but to make just no challenge, just to make 2% profit, and then they're able to promote the prop firm and their own courses as if they're legitimate traders.
That's the first time I hear that.
It's literally earlier this week, first time I heard it, and I thought it was shocking. Because don't get me wrong, I get it. It's beneficial to the person, the influencer. It's beneficial to the firm. I get that, but I just find it very misleading, and almost disrespectful, like I said, to the genuine traders who have a technical edge, like a true trading edge, because it's so misleading. It's then creating this whole ecosystem of potentially someone who has no technical edge, but yet is able to promote that they do because they're getting all these consistent payouts. That is essentially just a funded account that's handed to them for the sole purpose of marketing the firm, so that other people then look up to these influencers and then purchase accounts. And as you said, it's like, it's not they've got the best interest at heart for the traders. And it was shocking. When I heard it, it was shocking. I get it from a business perspective. It sounds amazing. But from the user and the trader side, I find it very malicious. I find it very misleading.
I'm a firm believer, like whatever we do as traders, and we are also trading influencers in the space, everything should be like ethically correct. And everything we do should be like in the favor of the trader and not against the trader. And I'm a big proponent of that. And this is where our educational program comes in. This is where our future prop firm comes in that we open up for students at some point of time, right? Quite soon. But yeah, so everything has to be done in the favor of the trader because we are traders as well. Like, why would you do something against what you are doing, what you're believing in? Again, big red flag.
Yeah, it's unfortunate. But such is the nature of our space, to be fair. So even if it's, whether it's brokers, whether it's prop firms, we see these sort of bad actors. And unfortunately, I think time will tell. I think like when we've always noticed is that when the ethics aren't on the right side, they're very short-lived. And when the ethics are on the right side, they last the test of time because they're doing the right things. Exactly. But in terms of your trading, though, you started as a futures trader, if I'm not correct. If I'm not mistaken.
So actually, I started as a stocks trader.
Oh, okay,
like back in the days, I learned trading stocks. I did this for like 1 or 2 years or so, and then I went into futures, and I was doing futures my entire life. And I only went into FX because of the prop firm space, because it's like efficient. I mean, we talked about this before, but yes, I would consider so first of all, I would always consider myself as a multi-asset trader, stocks, futures, and Forex. This is also where I would say partially my edge comes from, because I know how to use cross-asset correlations using future stocks and Forex. But yes, Forex only because of the prop firm space. Otherwise, futures, I would always trade futures, right? Yeah. I would always if I trade my own capital, I would always go for futures. But it has its ups and downsides as well, obviously.
What are your thoughts in terms of the futures prop space? Have you never thought about sort of venturing into that?
That's still. There's so many. So I looked into that, and I got this question quite a lot. What about the futures prop firm space? Way too many limitations still. I think there's only day trading allowed, and I think maybe there's 1 or 2 prop firms that you can hold trades overnight, but definitely not over the weekend. So, and then you can trade only like a few markets, not all futures. Way too many limitations still for like a real professional trader, I would say. Or like, maybe a day trader could get along, but a swing trader definitely not.
100%. Yeah, I think it's designed for the scalpers and the day traders at most, which is interesting because obviously, I don't know if are there actual stats available or been done, or any studies been done in terms of who's most profitable in the markets, or is it pretty even in terms of as long as you have an edge as a scalper, day trader, swing trader, you have a profitable edge? Because it's interesting that they don't design it for swing trading, for a swing trading perspective, because even a lot of props don't. Like some, like FTMO has a swing account, for example, but not many props have that option. A lot of props don't allow to hold over the weekend, and it's very interesting. I find that fascinating, just because is swing trading considered more profitable than the rest? I'm not sure, but then when I look at swing traders, that their concepts that they use within the markets are very much more simplified, and therefore. And that's not to mean it's not hard or easy or anything like that, but it just means it's more simplified. They're not like overlaying crazy amounts of confluences on the charts. And a lot of the time, if they are true swing traders, they're using fundamentals and keeping in line with it to understand where the volume and things are coming in and when sentiment can change. And therefore, it can be quite dangerous maybe to these firms because of the fact that you could hold such large swings with quite minimal risk, because that swing might turn into a 20, 30 yard trade, let's just say, not because you're targeting it.
Hardly, but because you have also bigger zones. You don't have very small, you don't time your market on a 5-minute chart. You time your market. Sorry to interrupt you, by the way.
No.
Because your market, whatever you trade on a daily chart, maybe even a weekly chart, and then you have just by default a bigger zone. So also by default you have a lower risk to reward proposition. Yes, you're absolutely right. I've seen once a study. It's quite old. That was done. Everyone can Google it. I think by any kind of university in the US, University of Michigan or so, they checked like day trading in Brazil.
Okay.
Something like that. I don't know if you've seen that study as well, like an official study by a university in the US. and they have checked like all the day trading data they got from Brazilian traders, and what they have seen is that 100%, there's a 100% failure rate over X amount of time. That's an official study that can be Googled. It's not. I'm not saying that. I am just quoting that study, right?
We like it. We like this. But no, I, to be fair to you, I have heard similar in terms of, I've seen people say before a similar sentiment where they're saying that essentially day trading over the long term, no one's profitable. That's what they try and say. They say like over the long term, it's kind of like a casino in the sense that it always goes at least back to break even. Like no one walks away green, which for the most part, I think when you look at the majority of people who are trying to trade, that's probably going to be true. They're going to end up in the red, right? Simply because
100%.
the main word being trying, right? The ones who have that technical edge, which is obviously very few people, that doesn't account for them because they are the ones who are in that 1.1%, that 1%, a very small number. But the majority of people come into trading, they're looking for freedom. And I feel like when I look at the space, majority of people, they're looking for freedom, but they're not creating freedom. They're not doing actions that sort of fulfill freedom. They are doing the opposite. They're choosing strategies and spending their time enslaving themselves to the charts, enslaving themselves to the markets
100%.
with the right intention a lot of the time. A lot of the time, they assume that that's what's necessary. Like, spend all day on the charts, right? Which to some degree can be helpful in terms of building knowledge and putting your reps in.
I fully agree.
But a lot of the time, they're probably doing the wrong thing because they're looking at a 1 minute chart live all day.
Yeah.
You know what I mean?
Yeah, that cannot be sustainable. That cannot be sustainable. I fully agree with everything you say. And in the very beginning, that kind of screen time is important because that this is how you learn, right? The more screen time, the better in the very beginning. But at some point of time, and I mentioned that in every single podcast, I need maybe 15 to 30 minutes because I'm considered, let's put it that way, I'm considered to be a swing trader, although I hate to classify myself. The social media space, because of the social media space, I had to start classifying myself. I personally would just classify myself as a trader. And what is a trader? A trader is somebody who is consistently profitable over a long period of time. That's for me a trader. Because everybody can call themselves a trader as well. That's a big problem in the space as well. You just open up a brokerage account, you place your first trade risk, and you consider yourself on social media a trader. Yeah. But there's a big gap between trader X and me as a trader, right? Again, this dilutes the who to trust kind of in that space. Yeah. And that's why for me, everybody who is not consistently profitable over a long period of time is for me a market participant, right? So that's why for me, I would classify myself just as I'm a trader. And I have that edge and I'm executing it on a daily. And since people say, oh, since it's daily execution and you stay in trades for X amount of time, actually my average holding period is right now more than 20 days, I think even more than 30 days per trade on average in the past 1.5 years based on my A-book analytics.
Yeah.
So that's what it's considered swing. But yes, you can hold if you are either pick the bottom of a market or the top of a market, or you are in a trending market that trends for a certain period of time, you can hold for much longer, right? Yeah. And the entire space is built up on day trading and scalping. People have to realize if everyone would trade like me, hold trades for 20 or 30 days, the entire industry would not make money. The brokers would not make money. The exchanges would not make money. Nobody would make money because they need people to trade. Yeah. And people have, and it's not a conspiracy theory. They need people to trade. Otherwise, all these firms, they would not make money.
Yeah.
Right?
Well, from the one level in terms of liquidity to one level in terms of just commissions, spreads, it's all necessary. Because like you say, this is what these platforms need, you know, to survive. It's very interesting you say that actually, because for the profitable traders to exist, there has to be losing traders.
There has to be,
right?
And because it's a zero-sum game.
Exactly.
Futures is a zero-sum game. For every winner has to be a loser. Otherwise, it doesn't work, the market.
Centralized exchange, right? Because with CFDs, it's always interesting, right? In terms of liquidity sweeps, when people reference like liquidity sweep here, etc. Because most people, if they are trading, if they're either on a prop firm, which obviously is demo and simulated, but then even if they're on a broker, it's B-book a lot of the time as well.
A lot of the time.
So therefore, there isn't this, there isn't this need for liquidity being swept because a large part of the participants actually aren't in live data anyway.
That's true.
Which is crazy.
And
right?
their volume is so insignificant.
Yes, yeah.
Insignificant compared to, the big banks and institutions out there who are trading. It's like our volume is so insignificant. We could never create liquidity, even if we wanted to, like the retail traders.
Considering majority of retail traders, their main goal is freedom. They want time. Obviously, they want financial freedom, but a large part of that is to create time freedom. The end goal is the time freedom. They want to be able to choose what they do with the day. They want to be able to choose when they go on holiday. They want to be able to choose what their family does, etc. It's a huge part of life, right? It's a huge blessing. It's something that you've achieved. Is there anything you can share with the audience that they could take some steps within their trading to help create that freedom, even if they're not profitable yet? But what they should be focused on, because as we said, majority are unfortunately looking at concepts that are scalping and day trading concepts that may work even, but it's just not presenting that freedom. And same with in terms of their time, how they're spending their time. They may be enslaving themselves to the charts, the complete opposite of their goal. Let's take a break for a minute there, guys, because I want to tell you about one of our sponsors, Alpha Capital. Now, without our sponsors, it's not possible for us to host such incredible podcasts around the world and get the level of guests that we are getting. So again, thanks to Alpha Capital for sponsoring the podcast. Now, Alpha Capital is one of the best prop firms in the industry. So far, this year alone, they have done over $50 million in payouts, which is absolutely incredible. They have the very best infrastructure in place for longevity from an in-house broker, so they can offer the very best trading conditions and platforms that all traders love to use. They're still able to offer services to the US as well, so the US traders can still trade with them on particular platforms. They have institutional experience, so they know how to manage a prop firm correctly and have such an incredible team on hand. On top of which, they have both a pro and swing plan. So depending on your style and strategy, you can choose which one is best for you. Now you can use and get the highest discount available at anywhere using Riz25. So that's RIZ25 for 25% off all challenges. The link's in the description below. So let's get back to the episode.
It's a difficult question. I also had to slowly transform myself from when I was learning, spending time on lower time frames. I remember like back in the days trading the QQQs and spider stocks on a 2-minute, just practicing on a 2-minute time frame.
Yeah.
And then at some point of time, I just naturally transitioned into higher time frames until when I realized, hey, I become more consistent with higher time frame trading, and I take away a lot of stress, and it's a kind of a relief, not always looking at the market 24/5 and not actually, the less is more. The less is better, because the more you sit, that's what I felt back in the days, the more I stared at the screen, the worse my trading got.
Yeah.
So once you get away from the screen and you just pre-plan a trade. So you pre-plan a trade. So you place your set, your entry, stop loss, and target, and then let the markets do its thing. Because anyway, just by staring at the screen and maybe yelling at the candles, the market will not do something different, right? And just letting the market play out. I mean, you remove a lot of stress from the entire equation, and this will help a lot. I think it's just for people, they get maybe anxious as well to, hey, I need to kind of observe what the market is doing. I need to do my trade management on the chart. But, nothing will change if everything is placed based on calculated risk, pre-planned, based on or any technical or any edge, fundamental edge, technical edge, combined edge. I mean, then you just let it play out and nothing will change. I think but it's from a mindset perspective, I think it's a slow transition, and it's like it takes time.
Do you feel like a part of that mindset is because naturally we would assume that if we're going to progress in trading, we need to be putting in the hours? Because like with a job, how do we progress in a job, or how do we even get paid in a job without progressing? Is we have to do the hours. And the more hours we do, the more we get paid.
100%.
We do overtime, we get paid more. If we want to progress in that job, we have to go above and beyond and show our
100%.
capabilities. And therefore, naturally our psychology as human beings has been wired to assume, trading wise, if I want to progress, more chart time, spend more trades, you know, and therefore it's a hard and slow process to unwire, right, and rewire those thought processes to understand that, okay, if let's say I have a job and I want to transition into being a full-time trader, but I don't have time to be on the charts to scalp or day trade, even if I had a profitable edge, but I don't have the time to do it.
Exactly.
That might be another reason why people have a profitable scalping edge, but they're not profitable because they simply don't have the time and they're trying to force it.
They force it, yeah.
And instead, they should learn to trust the ability to say, okay, let me learn a particular strategy that allows me to be more hands-off and slowly accept that, okay, I don't have the time to be on the charts, but I equally don't need the time to be on the charts, because with the right strategy and as long as I can control my emotions and allow price to do what it needs to do, to either go to my entries and to my exits or my profits, whatever it may
What
be.
it will do anyways, regardless of what you're doing.
Exactly.
Yeah.
Is that an interesting thing? Do you feel like a lot of people get trapped into thinking that they need to watch the markets for it to work out for them?
Yes, until they realize, or I realize, that time is never part of the equation, right? What is actually the biggest part of the entire equation is just the funds, the money, right? But the more, so it's and that's why for me trading is the best job in the world, or the best side hustle in the world, because it's the only side hustle in the world that doesn't require more time.
Yeah.
Any physical business, or even you as a podcast host, right?
Yeah.
If you want to push more podcasts, you require freaking more time. Because you have to record more podcasts.
Yeah.
And in any physical business, whether you need more projects, you need more people, you just always need more time to grow. But in trading, once you have your edge and it's all about position size, because the edge always remains the same. You don't need more time. And that's the beauty about trading, where the only part of the entire equation is basically your funds, right? And the more money you make, the more funds you have available, the more risk you can take.
Yes.
And that's why it's like the scalability without adding more time into the equation is priceless. That's why trading is the best thing in the world, even as a side hustle.
Yeah.
Because you can do it as a mother with 2 kids and a job. Because if you learn trading a certain way, you can still do it, and you can still make money from trading if you do it a certain way, and not like the 1 minute, 5 minute scalp where you have to rush at home and be at the desk and be at your screen to catch that single candle.
Definitely. No, definitely. No, I love that. And one thing you mentioned that actually reminded me of a particular question that keeps coming up from different episodes. Because everyone who is profitable, they really put an emphasis on obviously having an edge, right? And actually trading with an edge. Interestingly, though, I have had the question a good few times on those videos from the audience of saying like, but what does it actually mean to build an edge? Like, what should I be looking for? Or what do I need to do to build an edge? So maybe a perfect person to ask, like, what is that? If we were to break it down in terms of what do we mean by a trading edge? What tasks? What should we be looking at? Certain principles that need to be followed. Yeah, if you were to break down what it means to have a trading edge, or how to build or find a trading edge, what would that be?
So, first of all, I'm a firm believer that you cannot build your trading edge yourself. I firmly believe there's nobody as a self-taught trader. So you cannot just go out there and build your trading edge yourself. I firmly believe it's not possible. There are always anomalies. There's 1 out of 1 million who maybe made it, right? And you will see now me saying that in the comment section. There will be like people saying, but what about this person? What about this person? Yeah, but what about you? What about you as an individual? Don't speak in third party. What about you? Are you really capable? What do you think is it very likely that you build your trading edge yourself? So first of all, you need to find somebody. You need somebody who has a trading edge, who can basically deliver or convey that trading edge to you, right? Teach that trading edge to you. And however that edge looks like, I don't care, right? It's what is important, that it can make consistent income in the market. And what do I mean now? How could we now what does it mean consistency, right? How can we define consistency? For me, consistency means that my strategy can deliver 2 hours per 2 hours per month on average. What are R's? We speak risk to reward, right? And by the way, R's doesn't mean, so 1 R doesn't mean like 1%. 1 R means it's completely you define the risk, because I'm also a big fan of fixed dollar risk approach.
Okay.
Because let's quickly go back to the prop firm space, and this all ties into building an edge. Let's assume you have you're a newbie, all right, and you have never traded big capital. Now you buy a $200,000 challenge. Well, 1% risk per trade is like $2,000. If you before that you have traded maybe $50 risk per trade, and maybe even in the demo, now you cannot jump to all of a sudden $2,000 risk per trade. Also, like getting used to these big numbers is a slow process, which is part of building trading edge. It's not purely, hey, technicals, or not purely fundamentals, not even what I do, combining fundamentals and technicals. It's the whole environment of what do I need to be consistent, and what does it mean to be consistent. Yes, one part is building a strategy. If it's purely based on technicals, is it based on combined fundamentals, technicals? I don't care. But first of all, you need somebody who teaches you that. And then you need to slowly you have to get used to these bigger numbers as well in terms of fixed dollar risk approach. And then your strategy, your edge has to deliver 2 hours per month on average. Because then you can say, okay, I can make 2 hours per month on average, whatever that means, right? 1 hour you define as a trader. But let's stay in the prop firm space and let's assume, hey, my strategy, my edge delivers 2 hours per month. I'm trading a 200K prop firm account with 1% risk per trade. So let's assume the 1%, to make like easy math, the 1% is basically the 1 R. So I have an edge that now, based on my data, can deliver 2%, 2 Rs in this case, per month on average, meaning 20 to 24 hours per year on average. So again, 1% on a $200,000 account is $2,000. 2 Rs is $4,000 times 12. We are roughly speaking about $50,000 per year. What you then with your edge can accomplish, and then basically you have it black and white on a piece of paper. If your edge that somebody taught you, and you can basically, you don't have to copy. It's because again, personality plays into trading a little bit as well. Nobody can be Bernd, nobody can be Riz, nobody can be XYZ. So you basically can refine these strategies. Something like trade management is super vague, because there's no black and white how to manage your trade, right? And people are usually complaining, oh, I'm getting out too early, I'm getting out too late, I left profit on the table. There's no such thing as a perfect trade, by the way, right? But once you can, your strategy you have then refined for yourself, personal for yourself, and add the personal touch onto the strategy, and then you have these KPIs where you then can measure what we just talked about, risk to reward, 2 hours per month on average, and then you can measure if your edge is really working or not. Yes, and then also you can basically see, hey, how much money are you capable to make per year? And this ties back to the time factor, because now if you have your edge, and you have proven that your edge works by looking just at the KPIs, key performance indicators, by the way. Sometimes in the comments they ask, what are KPIs? Key performance indicators. Risk to reward is one key performance indicator. Win-loss ratio would be another key performance indicator. So now you make these 2 Rs, you are consistent, your edge works, and now you can basically see, okay, how much money do I actually want to make as a trader? And this ties back into what we said, the time equation, because now well, whether I trade a 200K account, a 400K account, a $1 million account, or like I trade 10 prop firms and I'm funded $2 million, the time equation never plays a role because the two R's remain, everything, the KPI stays the same, your execution, your edge stays the same, and you just basically execute. The only thing that changes is your risk factor, right? And then you can make X amount of money more because you're having more capital, more risk at stake. So that's basically my long answer to your question. I hope that
well, there you have it then. That's how you build an edge. Just to like sort of reference all that. So, you know, it's definitely beneficial to find someone who has a profitable edge. Because yes, as you said, it's possible. It's very possible, but very unique for someone to develop their own. Because it's the time that I think that if people tried to do that, they wouldn't be able to handle. Because you're talking about then trying to go into the market, get your own confluences, whether they're technical or fundamental, probably even if it's a combination of both, but then having to work out where the edge, you know, the sweet spot is, the 1% spot where the combination of all of these things creates an edge, which is completely possible, but the time that will take and the failure within that time, most probably won't be able to handle those hurdles, right?
I agree exactly. The time consumption on that would be way too much. And I always say, you know, well, you don't know what you don't know, and if you play wrong, if you practice wrong, you play wrong.
Very true, yeah.
You don't know. You just don't know. You don't know, and that's why it's always funny to me if some people say they come to us and they say they have 15 years of experience. Like what 15 years? Like, and they are still seeking for help.
Yeah.
Well, you unfortunately wasted a lot of time to try to sort it out yourself. You get my point? Like it's
100%, yeah, 100%. Because one thing we will come back to that 15-year thing, but in terms of the edge as well, it's like you said, it's the variables. You know, an edge is essentially just the variables, but not only technical and fundamental, where most people will sit and think, but also psychological, also in terms of your risk management, like all of those variables into one being an edge. So that's 100%. Why only 1% really are profitable, even less than that, because to find that edge from all the different factors, you're essentially looking for a needle in a haystack, right? Like you're looking for something that's so extremely hard to find, and that's why having some sort of guidance is helpful. And as you said, like it could be a scalper, it could be a day trader, it could be a swing trader, as long as there's an actual proven edge there, which is very important, the proven bit, right?
And then you have to check what fits your not only personality, because you know what? Personality shapes throughout your trading career. You know, my personality, I liked it also in the very beginning, a 2-minute chart, but you know, it shaped throughout my journey.
Yeah.
It's more like what fits your lifestyle. And what do you actually want to accomplish with trading? What do you want to accomplish? Do you want to like really replace one 9-to-5 job with another?
Yeah.
Or do you really want that I'm my own boss, I'm super flexible, I barely have to go and check the charts, and that's what, for me at least, that's the purpose of trading, and that's why I love trading so much.
It's interesting because if you had a room full of traders, I did this little test once. It was like 20, 30 traders in the room, and I asked them all, like, what's the most, if one word for trading, what would it be? You know, your goal. Everyone said freedom.
It's crazy, right?
Everyone. Like literally every single person said freedom. So it's interesting, as you say, like there are some who may be a bit personality-wise suited towards scalping, for example, but it's very few, and it's always very much circumstantial of where they're at. I think it's very important. But going back to that 15-year thing you mentioned, is there a common trait you've noticed? So like when people say that 15 years, 10 years, even 8 years, even 4 years, right? It sounds like a lot of time.
It's great, yeah.
But if you were to break it down and you evaluate those 15 years, let's say, a lot of the time what you find is people have been interested in trading for 15 years. But in terms of actively trying, like actually putting effort in, it could probably be brought down all the way to 2 or 3, you know? And even then, doing the wrong stuff. You know what I mean? But the reason I say that is just because, have you noticed from the traders that you've interacted with who are profitable, whether they've just in the wider community or in your own community, have you ever noticed where someone has talent, someone has what it takes to be a trader, but they simply don't have the work ethic to go the long distance, if that makes sense? Like let's say, for example, it takes
100%
with the right edge and the right sort of environment, 1 year, if they dedicated 1 year, they would be profitable and could be that trader and have the freedom, but they just don't have that work ethic, that consistency in terms of their effort. And therefore, they might be a hard worker, they might understand the charts, they might even have the edge, but they're not allowing enough time to go by where they're consistently turning up. Let's take a break for a minute there, guys, because I want to tell you about the best trading tool on the market, TradeZeller. The reason why TradeZeller is the #1 trading tool that every trader needs is because you can do backtesting, automated journaling, trade replay, in-depth analytics, and so much more. And the greatest part about TradeZeller is that it's all automated. All you have to do is connect your MT4 and MT5. It will pull all your data onto the dashboard. You can add playbooks. You can just add notes. You can add images from your trades, and you can get the insights that is necessary for you to progress as a trader. Now, TradeZeller is for absolutely everyone. Whether you're a crypto trader, whether you're a Forex trader, whether you trade prop firms, it is for absolutely everyone. And that is why thousands of traders have signed up using my link here through the podcast. Make sure you use the code RIZ10 for 10% off your monthly subscription, or WOR for 20% off your yearly subscription. The link is in the description below. And let's get back to the episode.
No, what shall I say? I fully agree with everything you said. First of all, I don't believe in talented trader. There's no such thing as talent. It's a skill, and the skill can be learned by everyone. I'm also never the smartest guy in the room, and I still learned how to trade. So there's just a skill, and if you spend enough time, but not only the time, but with the right in the right environment, having the right coaches, having the right work ethics, the discipline, everything all that stereotypical thing that people say, what are the key traits of becoming a trader? Yeah, it's like perseverance, persistence, discipline, following rules, la-di-la-di-da. Yeah, that's all true. And everyone heard that. But it's also kind of true. Without those key traits, you will never make it as a trader, because guess what? Consistency, they're like two sides of the medal. It means consistency is like taking trades based on your edge, but also consistency in terms of showing up. Because that's kind of what I've seen and what I've talked to people, that kind of bell curve scenario where people start off super motivated. Like it's you can compare it with like 1st of January, New Year's resolution, new gym memberships.
Yeah.
All of a sudden, first week of January, you have everyone showing up. And then they see like, I don't see changes in the mirror, or I don't see now metaphorically speaking, translating it into trading, I don't see immediate results. They quit. So they start off super hyped with a lot of intensity, but then they realize, I don't see results rather quickly, so they kind of stop, and then the bell curve, they basically find excuses for themselves why it's not working, why they stop, or they start finger pointing, blaming the market, the mentor, the strategy, the whatever, they're not finger pointing, but it's everybody's fault, but not their fault, right? And that's the thing, that consistency, right? It's trading edge, executing consistently, but also then showing up on a regular base over a long period of time. And this shapes the body, and this shapes also your trading edge.
Well, the interesting thing about consistency, though, is like it's in the word. Like, I think a lot of people think they will one day arrive at consistency. Like one day they'll just be a consistent, profitable trader. But consistency in definition means that it's continuous.
Continuous. Because you're scaling capital as well. It's going to be like challenging. That's also not... For me, that's why I like trading as well, because it's going to be challenging for the rest of your life, because you're not going to stay stagnant. You're going to scale capital. And the more capital you have at risk, it's an additional mental component, a mental stress factor that you cannot yet define in a way. Because right now, okay, I'm capable to trade $40,000, $50,000 risk per trade. But hey, am I capable to take $100,000, $150,000, $200,000 risk per trade? Most probably not, because I have to get there at some point of time and get used to these big numbers. And that's why it's like continuously it's going to be challenging, and that's why it's a never-ending learning path, if you will, because the scaling part, you're always going to, at some point, you want to take more risk because you're going to have more capital if you start to be consistent. You're not going to continue with a 200K prop firm account. You're going to want to scale.
100%.
Yeah.
I want to ask you on that actually, seeing as it's a very good topic in terms of scaling, because that's one thing that prop firms and has done. It's like we said, it's a great to utilize undercapitalized traders, a great opportunity. But I feel like a lot of traders, buy challenges and fail for one very simple reason, that they are overdoing, like they're going beyond their current ceiling from a psychological perspective. Of handling that capital, handling those risk amounts. So, as you mentioned earlier, they might be trading demo or a few $1,000s, where $50 is their risk, but suddenly they're buying a 100K challenge,
Exactly.
and their risk is now like 10x. And they're wondering why it's not working. And then again, like they finger point elsewhere when really they're just trying to rush the process.
Yes.
In terms of your journey, though, was there any point throughout your journey where you hit a bit of a ceiling and you had to really work through something to handle the next risk amount?
Yeah, it's funny that you mentioned that, and it was quite early in my career where the first time I saw like a 4-digit number on my screen, which was like $1,000 profit, and I was like, at this point of time, very early in my career, felt so much, and every time I saw that 4-digit number, I had to press close, really? Regardless of my predefined rules, whether I had like even if it was not a 1-to-1 risk to reward ratio trade, I saw the $1,000 and I pressed close because it felt so much at this point of time. Crazy compared to now. It's like now it's like my swap is like $20,000 on the trade, holding it for. Yeah. So, and that's exactly, you go through these stages where at some point of time this feels so much, and all of a sudden it's like, once you're used to these numbers, it feels like nothing. And we are actually, as traders, I feel like since everything is digitally and you see just the numbers on the screen, we are getting so numb to all these numbers, which is actually also a good thing, because once you start getting numb to numbers and you're trading maybe only KPIs and not the money factor, and actually that's what I'm teaching everyone as well, and telling everyone that, hey, you have to get slowly numb to numbers, because once you get numb to the dollar number, then you really have the real freedom to trade based on your edge and based on your technical KPIs, the target setting, the risk to rewards, etc., to your predefined targets. And you're not trading the money. You're not trading the $1,000 that I used to trade close, regardless.
What helped you to break through that barrier for that particular example?
I think what helped me is realizing that I'm messing up with my strategy, that I'm adding more harm than good to what I'm doing right now, and then slowly, getting used to seeing that number on my screen. I guess, It
feels like the gym, like the reps, the more repetitions. In two regards, the repetitions in terms of you've seen and the numbers a bit more, so you're getting more used to it. But equally, would you say that, as you said, like the more harm than good? So yes, you were banking the 1,000, but you were seeing the repetitions that really I could have had 2 or 3 if I followed my rules.
Exactly, 100%. You basically, and this is where trade journaling comes into play in the very early stages of your career. It's really important, because you have to look back at all the trades that you have taken and see basically where you can tweak your strategy. And this is the only thing that when I used to do screenshots and put them nicely into PowerPoint and made my notes, I was really like consistent in that as well, to see like, my gosh, I took profits here and price went all the way up. I could have made 10x, Yeah, this also helps you to build then the confidence. Otherwise, it's like you have it black and white on a piece of paper. Otherwise, it's just happy guessing, and you cannot build an edge or like saying, hey, I think. The worst thing a trader could do is say, I think, right? I think I'm doing this wrong. No, you have to show me on a, Excel sheet or on a journaling doc, like, can you show me proof that you are doing this wrong? Right? Do you have enough sample size that you're doing something wrong?
Do you feel like, I was just thinking about while she was speaking then, do you feel like equally how we say, prop firms being almost like a reset button is negative? Do you feel like in those early days in particular, doing a reset button on your journal, because a lot of people they'll blow a prop firm account or they'll blow their account and then they'll just reset. They'll stop journaling. They'll just shoo that away not out of sight, out of mind, right? And then start journaling again once they start trading again, or the new challenge has a fresh journal for fresh data. Do you know?
Yeah.
Do you think it's the same principles? Like when you're constantly removing the bad to get it out of your view, and not really tracking the data, that's really just harming you so much. Because a lot of prop firm traders do that. I get to know this from TradeZeller, right?
Okay.
Because they will buy an account, pay monthly, buy an account, do it for a month, 2 whilst they're doing the challenge, fail the challenge, cancel, buy a challenge 2-3 months later, do it again. But really, they haven't actually done the data. They haven't looked at the data. They've got rid of the data because they don't want to see that data because they see it as failure. And in essence, potentially the clues to their success is in that data.
100%. I fully agree with what you're saying. Eventually, journaling is fun until it's not red. Right? If like you have a winning streak, the journaling is so much fun, right? But it tells you literally almost. I mean, it tells you something, obviously, but you learn way more from your losing trades because this is where you see, especially as a beginner, you see what mistakes you are making, and you're gonna make mistakes. And that's what I'm always saying. Even if I teach now anybody my edge, right? It doesn't mean this person, and for sure this person is not going to be like profitable from day one. It's going to make mistakes in the execution. And this is what they have to see basically in the journaling process where, oh, I made a mistake here, I made a mistake there, I made a mistake here. Let's tweak it and let's make it better next time. But otherwise, how can you see it? How can you see it? It's impossible, right? So yeah, I fully agree.
I remember in our roundtable, one particular topic that really got people talking was in terms of psychology.
Oh yeah, it
trading
got
psychology.
viral. The reel got viral. And I wanted to make a video on that as well, but I haven't done yet.
I bet. But it is fascinating. And you know why? Because there's so much truth to what you're saying. And the interesting thing is when I do speak to a lot of professionals, don't get me wrong, they agree that, okay, there is an element of trading psychology, right? There is an element when it comes to like your FOMO or your greed and stuff like that.
And we have established this here, right?
Yeah.
We have established this when it comes to scaling, for instance, getting used to bigger numbers. There's always, like for me, even a psychology part playing in. We established this.
Exactly.
Right? So I fully agree, yes.
Yeah. But they also agree as well. And what you were saying was that when you have an actual technical edge, those psychological barriers that a lot of people lean on as a crutch or as an excuse and point fingers at, they dissipate, they fade away
100%.
Because your confidence in your edge, not in the markets, not in results, not in like your win rate, but that could be part of it because when you know your win rate, you know, on average, when you know what a losing streak should look like on average and a winning streak on average, when you know what the reality of your edge looks like, taking 3 losses in a row, if that's part of your edge and you know that already, when that happens, are you going to then revenge trade instantly? Are you going to then feel extremely emotional instantly? And I found it very insightful because it's very true. And it was interesting seeing the response from some people because it was like, they just don't understand. They hear the words psychology, you know, trading psychology is bullshit, trading psychology is useless or meaningless when you don't have a trading edge. But they just ignore, they just hear the words and get emotional
yes.
versus actually taking on board what you're trying to teach, essentially. You're trying to help with understanding that. Just focus on your edge because a majority of people
100%.
out there don't have the edge.
Hardly anybody has the edge. Let's face it. Let's look at the prop firm space, right? And I know data. I know the data. That out of 12,000, this was in February, this was the data that I got from 8cap back in the days, that out of 12,000 challenge buyers, 7.3%. So out of 12,000 challenge buyers, 7.3% only passed the evaluation. What is 7.3%? It's roughly 900 traders. So let's be accurate, 870 traders. And out of the 870 traders, only 10%, let's be generous, it's actually lower than 10% get to the first payout, but let's say 10% to do like easy math, which is from 870, 10% is like below 90, below 100, below 90, 87 traders. From initially 12,000, only 87 traders get to the first payout. And by the way, getting your first payout doesn't mean you're a consistent trader. Hell no. Right. So imagine, and what is 90 out of 12,000? This is below 1%. It's actually 0.75%. So below 1% are getting to the first payout, and this doesn't mean you're consistent. So what does this now mean? That, hey, having an edge, right? Are 99% suck in psychology? No, sorry for my language. They suck in trading edge. They just don't have the skill yet, maybe, right? They're still in that phase where they're building skill, and they cannot blame when I hear it's 90% psychology, 10% edge. Like, no, it's like a skill set. How do you build skill? And trading is a skill. Skill is like based on experience, based on practical application. And then once you build that skill throughout practice, the correct practice, by the way, right? Because we also established if you practice wrong, you play wrong.
Yeah.
So the correct practice, and then you're building skill slowly, and with skill you're building confidence, and with that confidence, well, you're taking that psychology part slowly and slowly out of the entire equation. I don't have the mentality and the psychology to fly a plane because I don't have it. I don't have the skill, right?
Yeah.
But I'm fairly confident that if somebody teaches me and I put in enough hours with some expert who flies an Emirates A380 is a fighter pilot, I could eventually at some point of time maybe fly a plane as well.
Yes.
But right now, because I would never blame my psychology, because for sure I don't have the psychology right now.
Taking that same analogy though, it's a very good one because you could learn in the smaller planes, where you first start to take your lessons. You could learn that
100%.
But essentially what people end up doing if we're taking it to trading is they'll learn from someone good. They'll learn an edge, but then they'll go from that small plane to trying to do a, like you said, an Emirates, Boeing
A380, right? The biggest plane. Yeah.
And they'll try and go to that thinking, okay, I've learned from the guy. I've learned the skill. No scaling.
No scaling.
No scaling. No
zero to hero.
Yeah. No, time. No hours being put into flying and hours into the scaling too. So not just like, okay, I've flown this one. Let me fly the next biggest one time, but actually the hours on each one to master that skill set along the way. I think that's a very important part that you mentioned there, because that along the way is very important.
Along the way,
right?
yes.
Because you could do like one contract size, or one lot size, two lot size, 3 lot size, one time. But that's not scaling. You could call it scaling in terms of the definition. But in terms of the experience and developing the skill through that process, that wouldn't be classed as scaling. You're rushing through the process. You're just
100%.
ticking a box.
I would call it actually milestone planning, where you set your KPI. Let's assume, hey, I feel confident trading $1,000 risk per trade. And then you apply that $1,000, that fixed dollar risk approach, $1,000 risk per trade for like a certain period of time. Let's assume 3 months, 4 months, 5 months. I don't care. And if you see that, hey, you can consistently achieve those KPIs that we discussed, the 2 hours per month, hey, happy, you achieved your milestone, you achieved your target. Now you should allow yourself, it's almost like you work for a company at the end of the year, you go to your boss and you have your target agreement meeting, and then your boss is telling you, okay, you achieved all your targets, now it's time for a raise. Because that's how I feel like, because I come from the corporate world, there should be like KPIs behind you giving yourself a raise. And what does it mean in trading, giving yourself a raise? It means you are allowed to scale risk from now $1,000 that you feel comfortable, that you felt comfortable, and that you have proven yourself that you can achieve your KPIs, that now you do like 1,500. Yes. Because at some point of time I also felt edgy, and I said, I remember that as well, by the way. I had like $2,000 risk per trade, and then I went like overboard and said like, I'm now the king of the world. I can go from 2,008 to 8,000. Yes. That jump was too big. And although I was like consistent in my approach, I was already consistently profitable like throughout so many milestones. But that mental component, and this is where the psychology plays a role, that all of a sudden not trading with $2,000 risk per trade, all of a sudden having $8,000 risk per trade, and now then being in drawdown, and I'm getting shaky. I want to get out of the trade early, or not like, hey, I'm like 1-to-1, but my target is at 1-to-2, but I'm up $8,000. It's such a lot. It's a lot of money, and closing early because I see the dollar amount, right? So I realized, Bernd, you jumped too quickly, too high. You get my point? So that's why
I love that. Yeah, no, I love that. So rather than just like scaling or making changes randomly, especially off the back of a winning period, for example.
That's horrible. Anyway, yeah, exactly.
But actually planning out, if I reach these KPIs, then I can look at an evaluation, evaluate and then decide.
And then you should approve yourself the race,
Yes.
the salary race.
Exactly.
Right?
So I was going to say, like, our last few topics that I have in mind, one just off the back of that is how important has it been, or how helpful has it been to take your experience outside of trading, such as the corporate world, maybe from university, other circumstances, family, whatever it may be, that is actually, if you take the principles you learnt there, has helped you in your trading, such as that example with the KPIs and the evaluations.
It's everything, man. It's everything. And see, I'm getting goosebumps because this means so much to me that, all the family and that I had, like, I had the corporate job for a very long time. All this helped me to shape, I think, made my trading career much smoother. And also I have a normal university business degree. I went to university, then I get a corporate job, family, kids. I have a level of maturity that helps me see things much clearer and way more rational. And I'm not falling for these, and I never felt for these quick money, rich schemes where, hey, take my 3 days course and I make you a profitable trader, and seeing things more clearer, I guess, and similar to you, I mean, you're a family father, you have kids, you're a mature person. I really feel like, and when I had my very first podcast back in the days with Abdallah Rashid, right? God bless him.
Yeah.
Same kids coming from the corporate world. These people, and you need to have a certain level of maturity when it comes to trading, because it's a profession, it's a business. This requires maturity. What else to say, right? I could have not imagined with, like, in my early 20s, I was anyway a little bit different. I was still a kid. I was still running around on the football pitch and playing soccer. I didn't think about the financial markets at all. Now the generation is a little bit different. I consider myself old school already with early 40s. But I could have not imagined with the immaturity managing thousands and thousands, hundreds of thousands of dollars of prop firm capital consistently over a long period of time in that early stage of my life, because you need to reach a certain level of maturity to manage that and put everything into perspective. That's my firm belief.
Definitely. No. And I couldn't agree more, because I think one thing I've noticed from influencers when I first started trading, at that time they may have been in their early 20s and been a certain way, a bit more younger in terms of their approach.
It's nothing wrong about that.
Yes.
Right? Nothing wrong. I want to say that.
No, 100%. But getting to your point, though, in terms of consistency, in terms of them leveling up their trading to a level which you would call professional and more consistent, I've noticed that the ones who have stuck around to do that have changed their mindset, changed their principles, changed their routines, versus the ones who haven't ended up leaving the space. They're not around anymore. And I think that's very telling.
It's very telling.
Because they started as influencers early in their days, which is cool. Like, they have the energy.
Nothing wrong. Nothing wrong. Like,
but in terms of longevity, because a lot of people have the goal of being a trader long term, but they don't know what that takes.
It doesn't.
And I think that it demands, just like having a kid, right? Or just like being up the corporate ladder, it demands someone who's willing to go above and beyond, willing to change, willing to
shit
adapt.
Sometimes.
Yes,
let's call it to eat shit, right? Because nothing. It's not like trading. We always showcase everything is like shiny and rosy, and we showcase the money and what we are buying with like all the profits, and but trading is like any other profession. We have bad days, we have good days. We curse sometimes, right? I used to throw water bottles against plastic bottles against the wall. I was so angry on myself most of course, also on the market, but also on myself.
But that's the thing. I think like it starts with the market, and then as you start to be more aware and grow, you realize it's yourself.
It's your own freaking mistake. But it's like any other job. At the end of the day, we have good days, we have bad days. It's not everything is shiny and rosy, what you see on social media, right? Even not for myself.
100%. I think it's for everyone. But I have two amazing topics I want to talk to you about.
Please.
One, obviously, this will be coming out just before the election. Right?
Yes, good topic.
And as a fundamental trader, two aspects to it. One being that, have you noticed anything leading up? Like, this whole year has been about elections, really. We had two snap elections in Europe, obviously with London, we had just, I think, 2 months notice before an election. With France, I believe, similar. But obviously, everyone knew the US election was coming throughout the year. And as we've ramped up, we've had assassination attempts. We've had, obviously, Biden drop out and Harris take his place. Obviously, we've had Trump going strong. We've had Robert Kennedy drop out and then endorse Trump. And so we've had so much.
Almost like a Hollywood movie, right?
Almost, yeah. That's basically what a Trump presidency is, right? But what are your thoughts in terms of like, so far, have you noticed anything with the markets? Have we been, regardless of fundamentals, have we been sort of trapped in a range at all? Like, what are your thoughts in terms of so far this year?
Very good question.
Up?
So I did a yearly roadmap in the beginning of the year. Actually, I think it was beginning of the year where I predicted that, where I predicted, and this is on YouTube, that video, the market's going to make, regardless of what's going to happen, the market is going to make new all-time highs at the end of the year, because what I do is I look at presidential election cycles. And so the president is getting elected every 4 years. So the cycle consists of 4 sub-cycles. You have pre-election cycle, you have election cycle, you have post-election, midterm, and then the cycle starts over and over again. And the market, how it behaves, and if you look, you can look back on the Dow Jones the past 124 years, and you can do that study, like, even very technically, because it's pure statistics, the market is behaving based on these sub-election cycles. When we look at the election cycle, because we are right now obviously in 2024, it's the election cycle, next year's the post-election cycle. In election cycles, the market usually is appreciating, increasing roughly on average, I don't know the exact number, but 8 or 9%, and it usually makes new highs, right? And what is quite interesting is also that, because there's always that debate, and I find that funny, what the market is going to do, how the market is going to behave if Democrats are going to be president. If somebody from the Democrats, if somebody from the Republicans, if Trump, Kamala, what happens to the market? You know what? Based on the statistics, it doesn't matter. Pure statistics, the market in election years, regardless whether you have a Republican president, a Democrat president, the market is going to make new all-time high. And there are certain quarters where, for instance, now, and this is where I'm also, let's see if it works out, I'm making a call. Let's make a trade call. I expect another dip. I expect another actually quite major dip. I'm even planning to potentially short the Nasdaq. It's coming out. Let's see if it works. People can roast me in the comment section if it doesn't work. I'm planning to short the Nasdaq because I expect another dip, and we're gonna find a bottom around mid of November. The sweet spot is around, and I can even tell these dates because I have the statistics in my mind. I did every year. I'm doing the whole yearly roadmap. So the market is going to make a bottom around the Nasdaq based on statistics in election years around the 14th or the 21st of November. Actually, the sweet spot is around the 21st of November. And then we're going to start a rally. And it's quite interesting statistically, from the 21st of November to end of the year roughly, based on the last 7 or 8 election cycle in periods in this time frame, 21st to end of the year, there's always been a gain. So the market is never, like in the past 7 election years, the market never dropped during that period of time. The market always like closed green, so to say, with actually also significant gain. So looking at these cycles is very significant. But again, this is only one part of the equation. And sometimes people say, hey, you predicted the market wrong. It doesn't mean that I'm gonna, like, now I have that's part of the statistics that kind of is part of my entire analysis. I'm not just blindly buying on the 14th or the 21st of November. It's just, I know, okay, the market fundamentally based on election cycle seasonality, let's call it election cycle seasonality, that's where the market statistically bottoms. And then we see a rally statistically. Regardless of who's going to become, I don't care. Like Trump, Kamala, who else could be, whatever's going to happen.
Yeah.
And I'm looking to buy. But if I don't find a technical reason to buy, I'm not just blindly buying. And that's what I mean with combining fundamentals with technicals. I have a fundamental reason to buy the indices, NASDAQ, Dow, S&P, or even some stocks during that period of time, mid of November. I have a fundamental bias that I want to go long, but I don't have a technical confirmation. I'm not going to get into a trade. What to do, right? Then I'm might even if I don't have a technical confirmation and the market's going to rally, I might miss out. Happens as well. So that's why, I mean, like, the combination of both is so powerful. And that's my statistical opinion on the election. It doesn't matter what's going to happen. The market's going to make now a dive, and then it's going to rally, and we make new all-time highs, and next year is going to be bullish as well, and everybody's going to be happy.
I love that. It's going to be very interesting to see. What we'll do is that forecast from the start of the year, we'll link it in the description as well. One final one for you there.
Please.
Something I think I've asked people recently on another show that I host, but I find it interesting because obviously social media, as we know, talks a lot about our wins. So like with yourself, for example, when you go on podcasts, a lot of the podcasts choose obviously your wins, like 120 plus times on the leaderboard,
Yes, of course.
which makes sense.
They showcase me in a good light.
Exactly.
100%.
Right? Not that I'm trying to do the opposite.
How you dare? Out of the office.
But what I want to highlight, really just for the audience to understand, like where exactly as we just talked about, these are the highs that people know of. But can you talk about a significant low moment in your trading journey or even outside of trading that really stands out to you, that you may have felt like, okay, I couldn't overcome this, but then actually was maybe one of the reasons you've gotten to the position you're in today?
Poor. That's a good. Do I have a second to think about
course,
that?
Yeah,
because it's
no
not
rush,
like a question that I. I mean, that. Anyway, that podcast is super spontaneous, like all conversation and nothing rehearsed.
Works
Obviously,
out for the best.
It works out for the best. So, but this is something I didn't expect as a question. One of my worst moments that shaped my life or like my career. Hard. I mean, I'm not sure if I wanna. It's not about. I don't have that kind of bad. So when it just comes to trading, it's not like, oh, I had that one bad trade that turned everything around where I had opened my mind and I had to change everything. My process was rather smooth because I had a mentor for it. I was a blank sheet. I didn't know anything about the markets. I didn't even know what futures mean. By the way, I started learning stocks because I didn't know about any other asset class. I just knew stocks exist. Let's learn stocks because that's the only asset I knew. I didn't know about futures or Forex back in days. That's how a blank sheet I was. Like, I didn't know shit. So I had a very smooth process because I started, I think, with all the correct tools, of course. But doesn't mean that it just meant skyrocketing up. It just like any other journey. It's like ups and downs. But there was never that moment where I felt like I'm gonna stop. Right? I'm feeling so frustrated. I'm gonna stop. I don't know. Like, I never had that. But in my corporate career, what shaped me, I guess, was once I moved to Dubai and I came from the university and I felt like I know shit and I know how the world works, where I got so much shit from my supervisor back in the days, where I remember that, and by the way, this is because you asked that question, and I've never mentioned that in a podcast. After that meeting, like where I had to deliver a project, and I introduced that project to my supervisor. This was the MD of the company, and in this during that time, I thought everything's gonna be cool, and then I got so much shit, and he actually yelled even at me and said like, "This is not how you can work," and everything is like wrong what you did, you have to work better and stuff like that, that I was so shocked that I went to the restroom and I think I cried even for a little bit. And I thought like, I need to get out, like I need to quit. And Dubai was the wrong decision. Let's go back home because everything turned out to be, in this moment, everything I felt like is shit. it was the wrong decision. But then, I pulled through it. And I think that's shaped me as well, that I didn't give up. Also, like in these, for me, dark and bad moments, business-wise and corporate job-wise, where I felt like I made the wrong decision to come to Dubai. I made the wrong decision to start a job there. I'm even not maybe capable to do the job there. That I, really started to, okay, let's sleep one night or 2 nights over it, and let's start over in a way, and let's try to get through these bad times. And I think for people who have these bad times in trading, I think it's just, you have to just walk through it, right, as well. And there's always light at the end of the tunnel, I assume,
Definitely.
right?
Definitely. No, I appreciate you sharing that with us, because the essence of the question is to really showcase that. So people watching this, I wouldn't assume that would be something that you would go through,
Yeah, nobody,
stage,
because we only show our shiny moments.
Yeah.
Like even, and I said that in a previous podcast as well, we always present ourselves in a positive light. And the stories are always positive stories and never sad moments. Of course, nobody would do that. Me neither. Why would I share like with people I don't know my sad moments? But these moments exist. And that's why people have to understand that this is just social media. And in the social media, they only see the photoshopped, shiny, good pictures. But what is inside you or me could be completely different, right?
Definitely.
And we all have bad times. We all have bad times.
Exactly. And as you mentioned, though, that was probably a pivotal moment, because if
Pivotal
you
moment.
had given up, that's telling your mind that's what you do in those circumstances.
Imagine I would have gone back to Germany. I would have never learned trading. We would have never sat here in the office, and we would have never met. I mean, that's how life plays
That's
out.
not right. That's I'm glad you did it, because by the time we've got here, it's like the I don't know if you can see on the camera. It might be reflecting, but it's like the the Rolls Royce roofs on the wall there.
It's
with the
crazy.
stars.
I only realize now that it's dark. I mean, for how long are we talking here? Is it like 3 hours for?
Incredible,
Okay.
incredible, and like you said, though, very natural, because we didn't know if we were going to record today or not.
Yeah.
And I'm glad we did. And really,
Thank you. Thank you. Thank you for coming by, and
my
thank you for
pleasure.
having that podcast.
A pleasure. We'll hopefully catch each other very soon.
Oh
as
yeah,
well.
100%, right?
But everyone at home, we're going to be checking, of course, on the elections, what's going to happen next.
Yes.
The link for Bernd will be in the description below, including the YouTube video he mentioned. So check that out also. But make sure you hit subscribe. Make sure you hit like. There's other episodes on screen. And until next time, everyone, take care.